So, good day, guys. Um, Someone asked me a very clear question on why I mark out and why do I mark out my reasons for marking out the monthly, weekly, and daily previous candle. So let me explain so that it will be clear, so that you understand where I'm coming from. Um, Knowing the highs and the lows and how the previous candle moved is important to me because it helps me to understand what price I've already done and what, because a monthly candle one monthly candlestick contains almost 4 weekly candlesticks, then 20 something or something thereabouts of the daily. So that particular 1 month candle had so many information on it that once you see price breaking out from any swing point on the monthly, if it's above or below, it means a lot. It gives you a clear head on what you're about going into, what you're about diving into, and it gives you a clear bias, as in it will give you the mind to have a bias on your daily trading. Maybe you're day trading and maybe on 15 minutes you see price passing through those lines that I do mark out. If it's above it, maybe price breakout is trending above the monthly time frame, it then means that it's going to be a strong bullish move. If it's trending below the monthly time frame, it means that it's a strong bearish move. It helps you to swing your trade, and it helps a lot. If you understand the I think that should be IPDA strategy. So I learned it from IPDA. I know ICT uses it most of the times to confirm his daily bias. So my reason for using it, I know I'm not using it the way they use it, but actually I'm using it. I don't know how to call names, maybe telling you the names of candlesticks. Sometimes I do forget about those names, and the little ones I remember, like the pin bar, the engulfing candle, the doji, then evening star and morning star. At least those few ones that I know. I'm not into this candlestick cramming of names, so that's why I prefer marking out my swing points, especially that monthly time frame, because once I spot any monthly move on 15 minutes or 1 hour, I have this confidence. It gives me this confidence that now I know what I'm about going into. At least I know that this is coming from a higher time frame and is on a lower time frame. Then it gives me more confidence, and even if I enter a trade and it's going, maybe there's little drawdown, I will still hold on to the trade because I know that definitely this thing is coming from. And even if I'm setting my stop loss, it will not be very tiny. My stop loss will not be very tiny because I know that once price pass this particular point, I know that it's no longer what I was anticipating. So that's why I always mark it out. Let me repeat it. Okay, someone also asked me whether I'm using indicators. Yes, I do add indicators. Recently I learned that I learned about moving averages. I do use moving averages apart from these fractals. I use moving averages. I use EMAs, and I'll add it here. Maybe let me just give some few examples of what I do. and how I use my indicators, when to apply my indicators. I think when to apply my indicators and how it works. I will explain with the little way I understand it. When applying it, I will explain. So remember what I always say, the monthly time frame will give you the framework of what you're doing. Like if you look at this whole move here, you see it that price is still bearish on AUD USD, clearly bearish. For years it has been bearish. Since 2010 it has been bearish. So now I have a clue that on the monthly, AUD USD is bearish. That does not mean that my analysis is going to be bearish or it's going to be bullish, because I've not gotten any information. I've not gotten any clear information. So now on this monthly time frame, I'm going to do my normal analysis the way I normally do. I always mark out the recent swing points. I don't go marking like here. If you like, you can mark it. Is your chart. You can mark here. You can mark it. You can decide to mark it and mark the overall swing points. You can decide to mark the overall swing points, the highs and the lows. It doesn't matter. It's your chart. I always tell you, the chart is supposed to be your personal asset. You're not supposed to look at other people's pattern on how they mark their chart. The only thing is that, do you understand what you're doing? Do you understand what you're actually doing on the chart? So now, with my eyes clear and open, I've already used my trend line. I'll use my trend line to get the full information. This is still a downtrend. And price has been tapping. If you look at here now, there's a channel here. I don't like calling names. It's not as if all these things I'm drawing doesn't have them, but calling names might make you start reasoning other things. You know that this is a channel. This is the framework you are working with. Now, the recent swing high I'm marking is here. The recent swing highs, the swing highs and the swing lows. This is the recent one. This is from 2019, and between 2019 to 2021 to 23, at least it's close enough. So after marking the recent swing point, you can mark anyone. You can mark this 2022 swing point. You can still mark it. It's your chart. Just enjoy marking out your swing highs and swing lows. It helps a lot. Each time you see any swing points from the monthly on a lower time frame, it will give you a different confidence. It gives a different confidence while trading. That's the only fact, the number one fact I know. That confidence is very, very important, because sometimes you will get confused. But if you mark your chart like this, at least you have a framework of, okay, between this range and this range, this so thing will happen. If you see a breakout within this range, okay, this is what will happen. Look at my monthly chart. It's my personal stuff. I alone know what I mark out in my chart. So now, yes, we have other swing points. You can go ahead to mark them. I'm not disputing that you don't mark all the swing points. These factors that I added on my chart helps me a lot to mark my swing points. I can mark all. Once I get to a chart, a pair, and it's giving me some confusion, now I've seen what I want. This particular swing point here breaks through this monthly candle that is still moving. Is a clear information that, oh, price pushed up here, tapped this place. This is acting as another block. It's pushed down, As it's pushing down, it went to retest somewhere, maybe to feel some imbalances here. That's the information on this monthly. You might not really need this information, but if you can be able to explain what is happening on the monthly, I wonder why the trading will be difficult. So you've marked, you know that there's a swing point here, price pushed here and start pulling down, which did not break any place here, but still it went up again, took out this high a bit, or let me call it an equal high, and still pull down, breaking structure here. This particular, as this candle is forming, there's a break of structure here, which is part of the previous monthly candle here. You see, so there's an information. There's a break of structure here, there's a break of this swing low, and this previous one here now is still giving us another information altogether. So what will I do? I'll still mark it, and I'll mark it. So for me to, let me change the pixel. So for me to be clear on the framework I'm working with this previous candle that just broke structure. This particular previous candle that just broke structure, this is my framework on the monthly. So if I see this black line, let me not call it support and resistance so that it will not get us confusing. I'm always using it to check my high and low, support and resistance, so that I will be clear on the lower time frame. So I've already seen the framework I'm working with. I'm working with this previous candlestick. There's a break of structure, price break the low of the previous monthly candle. So I now have the mind that, since the overall is bearish, price is still bearish. That is in my mind. And everything about trading is in mind. And they've given us the rule. The rule is that so far as you know that there's a break of structure, a retest, continuation or range, maybe consolidation before the normal impulse move. So I've gotten the information I want to get on the monthly time frame. I'll now go down to the weekly time frame. From the weekly, the things I marked on the monthly is still on the weekly. So what I will do is, if I'm not seeing any clear swing points that I've not marked, maybe I can decide to mark them, and I can decide not to mark them. Okay, this is one swing point, and this swing point is funny enough that there are all these things you hear about liquidity. This is it's normal liquidity. All these swing points are liquidities. Price always tap through it. You can even get another liquidity form here. There's a trend line liquidity, and if you draw it, if you make it longer, it becomes a channel. It forms a channel on the weekly. So I'm not seeing anything that is hard, maybe as you're asking this question. Now I've marked that one. Then I will now mark my normal previous candlestick high and low. So I've already changed the color. And from this weekly again, you see that price break through the previous weekly low and push down, and we are still, this particular week that just closed now, look at it here, starts here and close here. So what will you be expecting from this weekly now? It's a new week that we are moving into. This new week that we are moving into now, what I'll be expecting price to do is either it breaks this particular weekly, this one that just closed now, or if I see price break through it, I'll join the downward move, which is the bearish move. Then if I did not see any break below or above, I will now know that the framework within here maybe it's still a consolidation or something, But if I see a break, I will join. If I see a break upward, I will join the upward movement. But that does not mean that you will not have more confidence for you to trade within this channel, within this previous high and previous low. If you go to a lower time frame, you will see that this particular range now will give you more information, give you another information altogether. You can buy short or sell short before price will take a breakout. So that is very very important for you to know the reason for marking out those. Don't mind the way the chart is looking. It's none of anybody's business. I always say none of anybody's business. What you are looking at for your chart is if there's a break. Once there's a break, you know that yes, there's a break, and you follow the market the way it gives it to you. Then you go down to the daily. From your daily, you can still see that price did not make any move on Friday, did not make any strong move on Friday. On Thursday, almost the same thing happened. So what will you do? You now mark. This is just for you to get the information. You now mark it. Sorry. You now mark it out. Maybe you change the color. Then mark the high, the previous candle high and the previous candle low, and just mark it out because you have already gotten the information. Forget the way the chart is looking. You now go down to your 1 hour time frame. But sometimes as a beginner, you need to learn how to look at almost all the time frames. Look at almost all the, as a beginner, you don't need to skip like professionals. You can get some few information on the 4 hourly, monthly, weekly, daily, 4 hour. Learn to understand each time frame as you're learning. As a beginner, they will know, you will start asking which time frame is best, which time frame is this one. As a beginner, there's no time frame that is best for you. You need to master all the time frames because you don't know, you've not back tested, you don't really know what is happening in each time frame. Go to each time frame and understand the objective of that time frame, and each time frame has its own information. Go there, know what the time frame is saying, is talking about. Look at the charts, look at the move. You can change to line chart if you do not, if the candlestick is confusing you, change it to line chart. Mark out your pivot point. You can mark it, know where the price is going, know what it's doing, if it's still in a range. No, as the 4 hourly now, if you see price now is moving within this previous daily high and previous daily low, and look at the weekly, previous daily, and it's still in this same area, in this same channel. So what you will do is that each swing point, remember that each swing point is what we call liquidity. Apart from the internal liquidity, these are external liquidities. All these swing points that you're seeing here, they're all liquidities. All these liquidities that you are hearing as if it's a big deal, there's no big deal in it. It's just the swing highs and the swing lows that they are the liquidities. They are these points are what moves the market. Once price touch this point, there must be a reaction. Once price touch this point, there must be a reaction. So why will you trade when price have not tapped at this swing point? So that's why it's very very important. If the candlestick is confusing, you can change to line chart so that the candlestick will not give you another information altogether. So that's, by the way, this is the 4 hourly. You can say okay, 4 hourly price tapped through here, took out this low here, tapped through it, and it's kind of ranging here because market did not move much on Friday. There's no much volume in the market on Friday. So you can now go down to your 1 hour. As you go down to your 1 hour, you see that those lines are reducing, and on 1 hour you can still see some monthly lines. So what you'll be expecting is if price hits this daily swing high, the previous high, or price decides to tap down this, always know that there must be a reaction. And if it breaks out, it must pull back before breaking out to tap this weekly line. This red line denotes the weekly, the blue line denotes the daily, this black one denotes the monthly. So each time you see price tap at this monthly, which is this black one, just know that definitely that there is going to be a strong push down. If it breaks it, definitely there is going to be a strong push up. Finish. So that's why if I'm marking all these things, each of these line has meaning. That's why some people say the lines, where are you guys in, is that there's an indicator for it. If you understand that all these things, this thing that I mark is very simple, but there's an indicator for you that shows previous candle, high and low. They will tell you, okay, use add indicator to your chart. You add all those stuff. When you add it, almost the same thing. Okay, now I know what is happening here. Okay, I've seen what is happening here. Price was ranging within this channel. So what will I be waiting for on this AUD USD? I'll be waiting for price to either tap here and push down, or tap here, clear this liquidity here and push down, or tap here and push down, or still go high to this monthly high before coming down. So these are the areas I'm working on this 1 hour. This is where I'm getting my information from. So how will you take your trade? You wait to see the reaction. If market opens and price first push down, once price first push down, you can see that there's another block here. You can still mark it as your, because it's this one of the fresh zone here. Price have not tapped through it before. You can mark it as your number one order block, where again have price not tapped through. Here price have tapped through here, 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 all these places. So you can still use your trend line to mark out, to see if there will be a trend line break. So many confluences that you can be comfortable with. You can mark it. At least you know that this is another area that you're working with. So this is a channel again. You have given yourself another channel, and it's another what do I call it? Another framework altogether. So it's either you are waiting for price to hit here. Once you see a break, maybe breaks this trend line, breaks here, at the retest, you can buy to this point. Can buy to this point. Can set you buy to this point, because all of them are framework. And this trend line that I draw now is acting as liquidity. It's acting as liquidity. So I'm not seeing anything that I should start calling name, start abbreviating POS, PHS, and all those things. So there's nothing like that. My analysis is always very simple. As I'm looking at the chart, I follow what the chart is doing. And what gives me confidence is all these lines that I'm marking out. Once I see price, maybe I'm trading $1 account. If I see price tap here, I know that there will be a pullback. Either it's going down to the other side or to the opposite side. Then I'll close my trade, because my account is small. My account is small. You can't just hold on $1 when price is doing a big reaction on each of these points, all these points here. Once price tap here, but all these empty spaces is your free space, trading space. Just trade peacefully within those spaces. So that's why it's good for you to know your order block, the valid order block. And valid order block always comes with a tiny consolidation. When you go to a longer time frame, you see those consolidation. That's why how you know your valid order block. That's by the way. Now come to that's by the way. You can go down to 15 minutes to see, maybe if you want to know. Okay, look at the 15 minutes giving us another order block that is still fresh, that have not been tapped into. So all these places are your POI. All these places are your POI can be up and down. So you don't need to stress yourself. You don't need to stress your head. Here is your POI. Here is another POI, because you are looking for a sell. All these places. If you did not see any sell, don't trade. It's not a must you trade. Don't trade. If you did not see your bias is not playing out, don't trade. If the trade is not by force, don't force trade. But once you understand, okay, you see price, tap here, and it's giving you a reaction here. It's giving you a reaction that is going down, maybe something like this engulfing candle here, or something like or something like um let me see if I can see evening star. Okay, I'm not seeing anyone. Okay, something like this pin bar. Look at this pin bar here, something like this, something like this. If you see it something like this, you just wait for the candle to close. Maybe you wait for another candlestick to close below this pin bar, then you can now join this sell comfortably. Look at how far it went. Now your take profit will be here, this either this low, or you can look for um the leg that gave this push swing low, like here, can be your take profit. But this is your first take profit. This should be your second take profit. You see that price still pull through, and now breaker from here still goes down. This one is just impact test, it's not what is happening. So from here now, what will you be expecting here? Same thing. Market always does almost one thing. Once it have hit a point, all those points that it hits and leaves is your working point. If price hits here and start going down, you sell with them. Gives you a pin buy, an engulfing candle, double top, and the rest. So that comes to my indicator. Someone asks, do I use indicator? Yes, I do use indicator. Once maybe after this analysis, I'll finish analyzing like this. I'll go to my indicator. I'll add my moving average. Why am I always using I always use moving average 800? Because I'm a swing trader, and I heard that moving average, this period is just the period, this 800 period denotes the number of candle. I think that's how I understand it. I don't know whether it's correct or not, but I know that 800 denotes the number of candle, maybe under or periods. Okay, number of periods price will get to, and that's this 800. You see 250, and so I always like using 800. It gives me a very good support and resistance. It gives us this 800. I'm using it as my supply and demand. I'm using this 800 in EMA as my supply and demand. So I always keep the color black. That one, number one. Then I normally add SMA 21, simple moving average. Why am I using the simple moving average? Because the simple moving average gives me the 21 days or 20 days. It's supposed to be 20 days, supposed to be 20 moving period. But I'm using the 21 because sometimes Sunday movements will just add up to it, making it somehow 21. So I prefer using this 21. And it's simple. I'm not using EMA, I'm using SMA 21. I'll add it. Okay, sorry, I did not change the color. Let me change the color. I normally use it as green. So then which other indicator? I now find out that I was using EMA 5, 13, and 100, But later on, I now find out that when I minus 13 from 8, it gives me 5. Then that 5, what will I add to it? Maybe I'm trading Tuesday, Wednesday, Thursday, Friday, or sometimes I skip Monday, Tuesday, Wednesday, so I need 4. So I now decided on my own, okay, let me try EMA 9. Let me see how the move will look like. And I added, that was how I started using EMA 9. So and I added EMA 9, and I actually like the move. Then another one again that helps me to know my it gives me another confidence, like that EMA 100 as a 100 moving average. It gives me, instead of using 250 plenty all those things on my chart so that the chart does not look anyhow, I'll just add this EMA 100. I add it. I do add it. It makes the it makes my confidence boost. I don't know why I lie. I love these 4 indicators. Though the chart is not looking fine, because if I finish doing my analysis, I will clear my chart. Sometimes I will just leave all of them together. Then what do I look for before taking? I always look out for these indicators. I use them on 1 hour, 1 hour and 15 minutes or 5 minutes. These 3 time frames, that's where I normally, if I want to go short, maybe I want a faster stuff, I'll go to 1 minute, 5 minutes. Maybe I want to scalp, it helps me to scalp. So now look at the way the chart is looking. So what do I look for? So what do I look for? What do I look for on